So here's the plan. I'm not crazy about this plan, but it's really the responsible thing to do with this trade. And that is to get out if we break this previous resistance, turn support onto the daily. Why? Well, first of all, a break below this will indicate that this 21 moving average is really acting as some sort of notable resistance. Two, we will break this structure that we're forming here, which is a potential bear flag. We're going to the downside. Three, we will break the 4-hour 21 moving average, which is up there. And four, we will take away the possibility this is going to be a very bullish move up where we bounce up from the 382. And yeah, basically these are all signs that we're in for another leg down. And the next target would really be not here. And even here, it's like, I don't love buying at the 682 here because there's just no confluence. All the moving averages are above us. That's the problem with buying the dip, is that you don't have any moving averages to support you on the way up because you're essentially trying to buy the bottom. So that's why I put the range in here. And then what you could do potentially is you say, all right, well, I want to have my buys position sort of laddered within here, and then you just tell yourself that you're going to stop out. And we do have a daily support here, down below here. So you would say something like this: I would want to stop out here, and then you're going for the next big bounce. But of course, you're risking on the position. You're risking 2.5%, and really, you're starting here. We're starting with a big buy at around 7,000, of course. It's psychological, so we'd be risking 3.5%. But hey, it's better than than waiting for this whole move down. Like we want to sell here. We can. There's a very high probability that if we break this convincingly, that we will lose this 4% coming down here. And then, if we already are buying at the 786, then that's like 6.5%, 7%. So this seems like the natural, logical thing to do. And going down to the 4-hour time frame, that means getting out of the whole position. Also, it's a break of the 4-hour uptrend, of course. So I'm gonna have stops, I think, here, and then just to be safe, like down here, something like that, in case we get a wick. But even that, like, I'm not crazy about it. Most of it's going to be up here, I think. We do have this volume profile, interesting volume profile over here, where we might find support. Yeah, I mean, to be fair, that's and that's the 5. See, there already we're coming down to the 550 fib where we might find support. I think I'm just going to take out. What I might do? I might have like some teaser buys over here where we buy back for sort of 10% of the position, as and when we hit the 5 fib, and then sort of another 20% here, another 30% here, and then sort of 60% within this range. That would seem reasonable, whereby then we get, if we bounce from here, then we still have. Then even then, that I'm not crazy about. I think that there's a good chance that we'll just be ranging within here for a while before we make another big move either way, either direction. Let's have a look at the daily RSI for a second. Yeah, the daily RSI, it's reached a point now where it can easily come back down, and it has a lot of space to come down, a lot of space to go up. It's potentially turning bullish here, but this is also a point when we reach the x-axis where things can go the other way, of course, where there's some sort of potential for resistance here. Yeah. In summary, I'm not loving this action, and really a part of me wants to stop loss out if we break this previous low here. But I think that it's safer to give it some room and take out the position if over here. at sort of 367, and then really just within this range, and then try to get back in. I don't think we can reasonably get in anywhere below 7140. So this would be the main target. So we can have a little text box here again, where we say, okay, stop profit, because it is profit, right? Stop profit of the position at 7350, and that's, you know, from 6550 to 7, and the average, of course, is a bit higher because we took out profit already higher at 7650. So really, it's about 7500. So I'm pretty happy with that. It's a big profit, and we got lucky. We got the bottom, the exact bottom, and yeah. So I think that it's important to recognize that that things have gone well, and that we don't want to get too greedy here, right? We still want to be rational, and then make a new position, a new entry. 10%, and I really like this idea of getting different percentages at different levels. Now then, let's see, 10% at, I'm going to say, yeah, I really don't want to get in much before 7,000, to be honest. Like, I could get in here, but there's nothing supporting us, so I think I'm going to change it to just getting in within this blue box. So I'm thinking like 40% at 7,000-ish. So it'll average out at about 7,025. Yeah, something like that. And then 60% between 7,000 and 786, which is also this previous low over here. And we would stop out. Well, anyway, let's just say where we find support. So 6800. So that would be 6900, 6800 to 7,000 to 6,956 range. Yeah, so that would be about 6,850. Yeah, something like that. And then stop out at 6,800. I mean, it's 6,750-ish, 6,749, something like that. I don't know. Let's see. 6,749 gives us a lot of breathing room. Yeah, 6,749. And this would give us, I'm not as crazy about this entry as I was about buying here, because I have a lot of confluence coming down here. But if we come down on this diagonal moving up here, that would at least be something. I do expect you'll see some sort of bounce because with that, but really this box is further away in the future, right? I'm not expecting this to happen for a while, for another day or two, and yeah, we might see a bounce there, and then I'll be rationalizing that that 6,749 would be breaking this this diagonal and breaking this previous low and breaking the 786. It's a bit more of a risky trade, but yeah, we'll see how it goes. And I don't think that it warrants that large a position, but it also depends on the price action here. If we see some sort of bottoming out pattern, then I'd be pretty happy about adding some more to the position. But this is the general idea, and then this will average us out about 6,950 or so. I don't know, 6,9, and then we take out 6,750, and that's just a 2.5% risk for what could really be, potentially another big move up. And like, I know that I know that we're bearish. We can take this out. I know that we're bearish overall, right, with pretty much every indicator. But we do have this nice push up over here with this candle, and I do think that, like, okay, yes, we could very well come down to these ranges, but even if we do, I think that we have a good chance of bouncing up all the way up to sort of 8.7, touching on these moving averages from which we're pretty far away from now. Let's look at the weekly. Yeah, I mean, we've crossed the 100 and the 50. We could very well come back up to test them before moving down again. So I think that's somewhat more likely than, but really just somewhat more likely than coming down. But really, we also do have this big ass line over here, which I do think is, because it goes back such a long way, I think that it's more relevant than one might think. Now the next line, of course, would be down here, but this is really a long way down. So usually what happens is, which is annoying, is you can draw so many lines that, you know, there's no real big difference between the ranges. But here there's a really big difference within the range. So I think for that reason, the break of this line will be more notable than the average diagonal line that you could draw. And don't forget that we also have this diagonal over here, right? Now, of course, this is expanded a little bit, but yeah, something like that. And we can also redraw this a bit more accurately now. Okay, so that's pretty much it.